Hi everyone, I hope all is well. Today I have Lucy with me. She is an experienced mortgage broker. And today in this video, we will talk about how to refinancing a mortgage to buy a new home or invest in any property. So Lucy, what do you say? What is meant by refinancing and what are the rules about it?
Hello, everybody. Lucy Gagliardi here with the Dominion Lending Centers. Thank you so much for having me, Kamran. So with respect to refinances, because of historically low rates, we're seeing a lot of people refinancing for many different reasons. Some being, COVID has just taken a toll on the household finance, or people are actually saving a lot of money while being at home, and so they're looking at the equity in their property as well as their savings, and they'd like to have a look to see what they can do with respect to perhaps uh, pre-construction options, and we are looking at refinancing uh, a lot for that particular reason. So pre-construction is definitely an amazing thing to look at with respect to, or just even purchasing another property. But we're seeing a lot of clients that are looking to purchase additional properties with their savings and refinancing. And like I said, rates are historically low. So yes, there is a possibility that you'll have to pay a penalty, or I should change that word possibility to probability. But the important thing is to have a look at what you can, whether it's worth leveraging the equity in the existing equity in your property.
Right. So, what are the rules to get property refinanced?
Well, in terms of rules to get the property refinanced, we can probably do about a 6-hour video on that. But to cut it down in a nutshell, some of the things that the lenders are looking for at this point in time, and I know I've already mentioned COVID, that dreaded word.
Right.
However, has your employment been affected, or your income been affected by COVID? So that's one of the very first questions that I ask at that point. The second question, and the second factor that I look at, is your existing mortgage right now, what your interest rate is, and compared to the interest rate that are available at this point in time, as well as penalty. Okay. Why do you want to refinance? What is the purpose of the refinance? And if it's for investment, how much can we actually take out of your home? And at the end of the day, exactly what is it going to cost you? Is it a benefit, or is it not worth doing? So that is by far the most important factor at this point in time to determine whether it's the right time or not.
Right. So, how they get qualified? Is it same like if they are getting new mortgage, or there
Yes.
is different criteria?
No, it's exactly the same as getting a new mortgage. That's essentially what you're doing when you're refinancing. So you're actually getting a new mortgage on the existing property that you have. Now, one of the things that has been a very common misconception over the last little while is, when you go online and you search lowest interest rate, you're going to find ridiculously low rates. Now, unfortunately, those particularly lowest rates are not available to a client who is refinancing. And the reason that they're not available to a client who is refinancing is because the rates that are the absolute lowest rates are insurable rates. So what that means is the mortgage has to be insured through CMHC, Sagan, who is formerly Genworth, or Canada Guarantee.
Right.
Okay. So unfortunately, a refinance is not an insurable product. Now, that doesn't mean that the rates are still not super duper low. They're actually about 1% lower than they were last year at this same time. So, is even though you're not getting your 1.49, 1.59 in a fixed rate, First of all, you can get that on a variable, and even through a refinance. I just did a mortgage for a client, and I received the commitment yesterday at 1.5%,
Oh,
and that's on a variable rate. So
good rate.
that's an excellent rate. So what we do is, once again, we determine whether or not it's worthwhile for you to refinance right now. We find out what your penalty is. And again, sometimes it's costing you a little bit of money right now, but in the long run, it's going to end up saving you money, and you can purchase you can purchase another additional property on top of that.
Right. And usually, how long does it take to get a property refinance?
So that depends on how long it takes to get the appraisal, because most of the time we're going to require another appraisal, but I can say anywhere between 3 and 6 weeks. So the process to get a refinance, and again, different brokers and different financial institutions, like banks and things like that, they have different processes, but I'll share with you a little bit about my process. I do the majority of the legwork up front. And what I mean by that is I actually collect all of the documents from you up front. So your income confirmation, I collect current mortgage statement, current property tax bill for any properties that you own. And if you're an investor and you own multiple properties, I'll collect leases and that sort of thing. So I do all of that at the beginning. Then I forward that and the documents, as well as the application, to the lender. So once we receive the commitment, we have already done, I want to say, 3/4 of the work.
Right.
Once we sign up all of the documents and you're happy with the commitment and the rate and the terms, and we go through we go through all of the details of the mortgage and as you would like to see it, because again, being a broker, that's something that I can tailor. A mortgage is something I can tailor more towards your goals and what you'd like, as opposed to telling you what you can do, which is what the bank does.
Right.
What I would do at that point is then order the appraisal, gather up the last few documents that we need, that perhaps the lender may need to clarify something, or they may ask for something in addition to what we've already provided them.
Right.
Connect with the lawyer, and it's all done. So we really can get a refinance process done anywhere between, upwards of 3 weeks. And I say 3 weeks because I always, most reputable lenders at this point in time, they really want to see you broker complete, or they want to have everything 10 days before closing. It doesn't mean there aren't people that, or financial institutions that can't do something on a rush basis. We absolutely can. But as a rule of thumb, I would probably say about 3 to 4 weeks, depending on how long it takes for us to get the documentation and the appraisal completed.
Right. So it's good that you process everything up front and then go ahead with the refinancing.
I don't like surprises.
Yeah.
And Cameron, you know that I don't like to call you and tell you there's a surprise.
Yeah.
And, the reality is, at the end of the day, without providing the documentation up front and without that legwork at the beginning, there is a lot of room for risk
Right.
to the actual transaction and error. So it's my job to make sure that any risk associated with any transaction, be it on my part, on your part, or on the client's part, is completely mitigated. And we're removing any possible risk that we can, remove.
Right.
And so the other thing as well is, the last thing that we want is for somebody to fall in love with a particular property only to find out we can't get that exact mortgage that they need.
Right. Yeah.
So providing the documentation up front is crucial to that. Many times there are clients that, how can I put this? Clients that earn more money than the lender is willing to acknowledge. And when I say that, I mean things like, or clients that are perhaps salaried plus commission, or hourly plus overtime. We need to have a 2-year history of overtime, working hours, or bonuses or commissions or anything like that in order to use that as income,
Right.
right? So theoretically, a client can very well make $150,000 a year, but because they haven't made that amount of commission or overtime hours for 2 consecutive years, we would have to use their base salary or their base hourly income only. So there's a lot of factors like this that the only way that we can actually confirm what income we can use is
Right.
to have the income documents presented at the beginning of everything.
Okay. And how about some people like taxi drivers or truck drivers? They have income as a cash as well. So how do we proceed with that?
That's very, very difficult. I can tell you that for the most part, with an A lender, we cannot use that income. And when I say A lender, I mean bank or monoline lender. We cannot use that income because
Right.
at the end of the day, they need to see your income on a tax return. If
Mm,
it's not on a tax return, they cannot count it as viable income.
right.
Now, we do have certain options with alternative lenders such as Home Trust, Equitable Bank, Optimum. And this is where I'm going to say, area of expertise lies is figuring out what income we can use and how we can use it in an alternative market to get you the home that you want or the investment property that you want.
Right.
Okay. Now, interest rates are slightly higher, but right now, we can get between 1.5% and 2%. And on an alternative market, we'll call it, we can get anywhere from, and showing stated income, let's say between 3 and 4%. So yes, the interest rates are quite different.
Right.
However, that's when we're going to actually sit down and say, let's do the math. Is it worth it for you to make this change or to purchase this property? Is it is it still profitable for you at that point to make this particular
Right.
purchase? And we never thought, or I personally never thought I'd do the amount of math I do in a single day. But it's important to really have a good understanding and work with somebody that has an excellent understanding of the math and how to calculate whether or not something is the right thing to do financially or not.
That is basically one of the most important things to calculate everything and have homework properly done so you
Absolutely.
can avoid a stressful situation later on.
A stressful situation and a very costly situation as well.
Yeah.
Because at the end of the day, if you've entered into a firm agreement and, we can't find a financial institution, we
Right.
have a problem. There are, what the significant ramifications and legal ramifications around that are. So
Right.
in order to avoid those legal ramifications and costs, most of the time what would have to happen is you would have to actually go into a private circumstance. And a private circumstance, if you have 20% down, I'm going to say a baseline of 20% down. Some want to see 25, some want to see 30% down, depending on the demographic of the property, depending on, a whole bunch of different factors. But if you're looking at going to a private lender, you're looking at anywhere from, let's say, 7 to 10% on a first mortgage,
Right.
plus fees of potentially 3 to 6%.
Mm,
So at the end of the day, if we're not doing the legwork up front to make sure that we've calculated everything correctly and that the lenders are able to use whatever income it is that we're able to give them, or what documentation we're able to give them, okay, it could potentially put you in a very, very significant circumstance. That's not pleasant.
right. Yeah.
So
Oh,
refinancing, the best advice that I could possibly give to somebody that is looking to refinance is call me.
Right.
No, but all kidding
Yeah.
aside, all
Yeah,
kidding.
we will include your number and my number, and they can ask if they have any real estate question or mortgage question.
Absolutely.
Yeah, no.
But and of course we're going to do that. But with that being said, make sure that the professional that you are working with, the mortgage professional that you are dealing with, understands how to calculate penalties,
Right,
and they understand how to calculate, uh, I call it mortgage math,
right,
because mortgage math cannot be done on a standard calculator. It has to be done on a financial calculator. And sometimes there are apps. I particularly have an app that we can use to do side by side comparables and things like that. But if they don't understand proper mortgage math, there's a lot of room for error. And we don't want
right,
that to be the case. We don't want to cost you money. We want to make you money.
right. No, it's really good. And yeah, that's, I think, all we have for refinancing purpose. But if you have any real estate questions or mortgage questions, feel free to let us know, and we will cover those topics in our upcoming videos as well. Please share this video with your friends. Thanks for watching. Bye now.